Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, November 17th DT Reports update video for our YouTube subscribers. What this video is a very brief video on the recent market activity and specific trades for the beginning of next week. So it's much more brief than what we give our regular subscribers, which is sometimes 20-25 minutes long and in much more detail and more trade strategies. But the whole idea is that you get some good information from what you have here. And of course, if you like what you see, please come by dynamictraders.com and check out our regular reports where you receive daily updates and some comprehensive video and training instructions. Okay, let's take a look at the ES, the stock indexes. And if you haven't watched the video from last Saturday, you might want to do that because the stock indexes unfolded precisely as anticipated last Saturday, not last Friday, last Saturday. So we anticipated that the decline would probably be a wave B, corrective decline, have a few more days to go. Ideally, it would bottom on either November 13th or 14th. Those were the strongest time factors to complete a corrective wave B decline. At the very latest on the 16th, that would be the extreme time target. Well, it made its closing low right on the 14th, right in the high probability time target, and then it made its actual price low with a strong reversal day on Thursday to complete its daily low. And what we mean by a daily low is when that's complete, the market should then be at least 3 to 5 trading days sideways to up. And corresponding to that low was our daily momentums had reached oversold, warning that we're also near a daily low. And then on Thursday, they made the bull reversal. And we call this a dual look-back bull reversal. It's a very strong sign that that daily low is complete, and a bull trend should follow over the next few days. It also made the low right around the 62% retracement. Typically a wave B makes around a 50 to 62% retracement. So there are other price factors around there. But that's good enough. We don't need to make it complicated. Some simple time factors, simple price retracements, knowing that more than likely this is a corrective decline. What follows a corrective decline? Well, it's usually a resumption of the trend prior to that decline to a new extreme. And that would mean if this is a wave B, we would have one more section up and a wave C, probably to above the November 7th high, to complete the higher time frame correction off of this October low. So before we go on to some other data, I'm going to look at some shorter term data for immediate trade strategies, and that will also help us identify the probable position of the market. Is keep in mind, always keep this in mind, that this initial decline from the September high to the October low, nice 5-wave declines, should be in Elliott wave terms a 1 or A. We should be making a correction of some sort, and eventually the bear trend continue to below this low, and that's what's really significant, is the higher time frame trend. So have we completed the daily low? Yeah, we've done that. We know that. But what should we expect now over the next few days? We should expect it to be sideways to up for another 2 to 3 days anyway. But I want to show you something that's giving us some warning that we may not make a new high, that this may be a much more lethargic correction than which would be anticipated. This is the 240-minute data. And let's first look at the data coming down off of the September or the November 7th high. And I'm going to talk in Elliott wave terms. Probably most of you that are listening have some little basic background in Elliott wave. But if we look at these bars and this data coming down, it certainly appears impulsive. Now, impulsive means that the higher time frame trend is, in this case, it would be bearish. And it does not appear pattern-wise to be the completion of a correction. So the other warning is that this is an impulsive decline, which typically would indicate the higher time frame trend is bearish, is that we can look at this advance as an ABC. Potentially, it's completed an ABC correction. The reason that for the past several days I've anticipated that it wasn't a completed correction is because, I'll go back to the daily data, is that, and now we'll talk a little more about timing, the November 7th high did not meet the typical minimum time target for a correction against a 5-wave trend, and that's the 38.2% time retracement. So, typically, this would not be a completed correction, so that's why I labeled it as an A. We're probably making a wave B low, and they're going to make a wave C high, and ideally into about November 20th, 21st, otherwise into next week. That would be the ideal time to complete the correction up from the October 29th low. However, because this data is impulsive on the downside, what we're going to be looking at closely over the next 2 or 3 days is the nature of the advance off of this low and if it exceeds the November 7th high or not. So at the least for short-term traders, we'd be oriented to the long side for the next 2 to 3 days until the daily momentum, I'll go back to the daily, either gets overbought. And boy, this DT oscillator is really helpful to identify when we're at or near price highs and lows. So typically it would get overbought before the next daily high occurs. If that happens this coming week over the next few days and price has not exceeded the November 7th high, good possibility that this is actually the beginning, or I should say the resumption of the higher time frame bear trend. I wish I could be more definitive than that, but what we can do is we simply identify what the market can do to confirm or invalidate a particular trend. So in this case, we're definitely looking at 2 to 3 days. I shouldn't say definitely, everything's probabilities. 2 or 3 days probable sideways to up into next week, and then we'll see when the daily momentum reaches overbought if price has exceeded the November 7th high, and if it hasn't, this is highly likely to have been a corrective advance. So that's what we're looking at for the ES over the next few days. And it's going to be very revealing, the pattern coming up and how far it gets in both price and time before the daily momentum gets overbought again. And of course, a reminder, those of you from the U.S. know that Thursday is a non-trading day. It's a holiday here, and Friday is just like a half-day trading day. So there's for practical purposes, no trading. And I can assure you on Wednesday, most of the traders will be knocking off early. So it's really going to be, what does this do over the next couple days going into Wednesday? That's going to be very revealing. So if you happen to be a subscriber to our regular reports, you get daily updates that we follow up on these technical positions. So if you might want to check our daily reports out, our DT futures or stock and ETF report at dynamictraders.com, and if not, be sure and be back next Wednesday on our YouTube video. We'll follow up on this. There's another market I want to show you that's in a very interesting position, and it's one that I've talked about in these videos in the past, and it's gold, and now it's in a really interesting position. So let's take a look at gold. This is a weekly gold chart which I showed 3 weeks ago, and identified this advance off the August low as a probable A, B, C correction to complete a wave 4 correction, which would then be followed by a decline to a new low. And our weekly momentums are dual look back bearish, and they usually reach oversold before they complete a weekly low. So if we were just looking at this data, we'd look at this and say more than likely gold is soon going to resume the bear trend to a new low, both based on pattern, based on price, based on weekly dual time frame momentums. Notice I got a question mark here, and I want to show you something where what the market can do to say I'm wrong about that. You always got to identify what can the market do to invalidate your outlook or your trading position. This is daily data, and here's coming off of this October 26th high. Got that question mark on it. We came down in one swing. We came back up in another one, a corrective swing. That's not showing here, but that was right almost to the tick of the 78.6% retracement. And in the past week or so, again, coming down to a new recent low, again, just tagging the 78.6% retracement, and it reversed off that very sharply. So I'm going to take this one line out. That's no longer relevant. And two things happened in the last couple of days. Number one, if the trend were, higher time frame trend were bearish, we really shouldn't close into this closing range. And we did that. We closed right on it on Thursday. And then Friday, we had a pretty big up day, closed well into this range. We call that an overlap, and that is not impulsive behavior. That is not the behavior if the higher time frame weekly trend were bearish, as it looked like on the weekly chart. Two things right now we want to be aware of that would indicate that we're not going to resume the bear trend and that we're going to begin on reverse to a bull trend. Number one is a close over 1222.50, and it actually on Friday closed above that in aftermarket settlement trading. So I need to see at least one more higher close before that signal is complete. That is an overbalance in price. That's the 100% alternate price projection of what I got labeled a wave B. And again, if the market, higher time frame market was bearish, it usually would not have a corrective rally greater than this rally. So that's an overbalance of price. That also is an early warning that the trend is reversing to bullish, regardless of the bearish higher time frame weekly momentums. But here's the next signal. This is the one you want to be aware of in the days ahead, and that's at 12:30. We'll round that to 12:30.20. That's the 78.6% retracement of this decline. That's usually the maximum retracement if the market's making a correction. So if the gold closes above 1230.20, that indicates that this was a corrective decline, not the beginning of a wave 5 bear trend that would continue to a new low, but that we just finished an ABC correction, and irregardless of the weekly momentums being bearish, more than likely we're resuming a bull trend and we're going to take it to new highs. And when we get a signal like that that's against momentum cycles, that's usually pretty powerful and would indicate not just a additional few days rally, but we might see a relatively powerful rally a little bit longer term, many weeks following that. So that's the signal that would be very close to the low. Now we're about to make a daily high in the next couple of days because our fast line of the 8 momentum has reached overbought. So we should make a daily high in the next 2 or 3 days. But if at any time in the days ahead, if we make a close above 1230.20 without having traded below the November 13th, last Tuesday's low, that's going to be a very significant bullish signal. So keep your eyes out for that. This is Robert Miner signing off. I hope if you like this, check out dynamictraders.com for DT reports where you get a lot of trading education, daily analysis, specific trade setups for a very, very low cost. Take care. Have a fantastic week.